What's up, guys? How's everyone doing? Hmm. Trying to find my there we go. See if this shit's working. Okay, cool. How was everyone's weekend? Hi. Yeah. Good evening. All right. Let me get that done. Okay. What are we doing? What tickers are we doing? Friday was just up and kind of boring. Mm, Palantir, Tesla, Nvidia. Upstart. Fubo. I'll cover the carry. I got it right here on the list. What else we got? Carvana. SMCI. What the fuck is TSSI? MSTR. ASTS. D-Pro? Alright, fine. I want to know what TSSI is before I agree to cover it. Oh, Jesus. That looks like crap. That's the new hot ticker. Oh, is it like the new Reddit baby? Data center service trash. Yeah, it looks like an IT company that should have probably never. Let me guess, they don't make money. No, they don't. Well, they did once. Hmm. I love those debt to equity ratios. I mean, I guess they were net some income for a couple quarters. Not recently, but they were doing all right there for a minute. Hmm. 22 million share float. Price to earnings of 37 right now. I mean, it looks bearish, right? It's fucking squeezed a bunch of short positions out, like back here in fucking June, and then sold off, probably back down again. Do you want to short it? Might still be trash. Might start to accumulate here. I don't know if I would short it at this level. Like from a technical perspective, I highly doubt I have any options information on it. I don't. It's just like shit Nasdaq stock. But I mean, yeah, technically you wouldn't want to short unless it lost like $5, 5.75. So I don't really know if it's a good short here, especially getting support at 7 on the last test. So it might start to just accumulate here, which would suck, for both long and short positions. Generally, after this much volatile price action, you get a lot of realized vol crush. Um, so like, yeah, that's not going to be super fun. So I'll get that one out of the way now. Anything else? I'll, I'll cover JPY. Anything macro that you guys want to talk about besides JPY and the carry? We've only had one trading day since the fucking decision, and the decision was in line. So, um, I think we're gonna largely we're probably going to see an effect from that. But might take a little time. I do fucking look a little bit red. There's no sunlight today. There we go. When do you brandish your tip and erupt liquidity? Oh Jesus. Hi Grim too. All right. So you guys don't want to DVN? Sure. Nothing on the macro side. I'm going to cover macro on the write up tonight, but answer the question. No, just privately, Grim too. Privately, it's not. It's not for you. Yeah, move. Oh, you want to talk about why bond volatility is in the toilet? Okay. Let me see if I can screenshot this, and then we'll go one by one. Pull this up over here. Okay. Um, I just want to know when down. That's fair. I think corporate buyback should be drying up pretty soon. We're moving into end of month. Uh, Historically, there's a lot of rebalancing that happens in this period, and a lot of window dressing. Obviously, we're a little bit past the tax date, but we're gonna have a lot of year end fund rebalancing, and we're going to have pensions taking profits on returns. So we're probably going to get a decent amount of realized volatility. I don't know if that'll necessarily be up. I feel like the corporate buyback blackout periods have been fairly weak all year. So we might get some weakness, and then we'll see what happens with the carry as the hedging falls off from the rate decision, because carry leverage is ridiculously high right now, and we could definitely there's a lot of room for that to come down. Um, like if Yeah, I guess we'll do macro shit first since I'm already kind of diving into the carry. So I mean, if we're taking a look at the top end of that trade, I think Friday we saw some U.S. bonds selling off following the rate decision, and that's probably something we're going to start to see a lot more of, especially as Japan normalizes. As we're going to see repatriation of funds back into Japan, because right now their 10-year yields is at like 2%, 2.02% on the JGBs, and then higher, much higher on the 20 and 30 year. And so right now, you have a lot of Japanese insurance companies and major banks and stuff that own a shitload of UST. And the carry on this is no longer positive. There's no positive carry. And so you get a lot of you're going to get a lot of rebalancing of those funds from UST into JGB. So they're going to domesticize their portfolios in an effort to maintain a positive yields on their asset holdings. And part of the reason for that is margin. Part of the reason for that is in order to not have a negative carry against their assets, which would be really bad for large insurers and a lot of these like mega corporations and large Japanese banks. And in the process of doing this, the UST is probably going to decline. And we did see some of that Friday, despite not seeing a decline in the dollar. We did see some of this action occur. Over time, we should see USD fall against JPY rising. But basically, there's about 1.13 trillion in US assets that are likely to be slowly bled off, and then depending on how quickly the Bank of Japan normalizes rates, the speed at which those assets are likely to bleed off could accelerate, especially if yields on the Japanese side start to move up. So if yields go up, beyond where they're at now. And obviously, they had a little jump with the rate decision, but if they continue to rise and bond buyers continue to not buy JGB, like say they're selling the UST but going somewhere else in the interim while they wait for JGB yields to rise more, then this pushing up could accelerate the rate at which USTs sell off. And so we'll kind of see what the bond vigilantes do over there, but that's kind of the effect that this is going to have. And obviously, with the spread between USD and JPY being more under pressure, we're likely to see this trade start to deleverage a little bit. Now, I forget back in like '06, if we go way the fuck back, and we go look at like the start of the carry, around June of '07, I think is when the Bank of Japan first shifted their yield curve control around a bit and changed rates. Uh, and like their bonds started to get substantially more positive. And that's where we first started seeing that trade deleverage. And then, obviously that accelerated into the financial crisis. So you see it like lever back up here and then just pretty much down until about 2012. Carry stayed pretty flat from 2012 out through October of 2021, and then it has been leveraged to the tits over the last 4 years. I mean, to literally new all-time highs on the leverage there, and we saw even more of that Friday. Following the rate decision, we got another new all-time high on that, and as his portfolios become more and more bond heavy, they're going to pick up more and more volatility demand, and that's kind of why we watch this like bond vol curve, right? And so we can see where volatility picks up relative to the kind of the exposure to the 10-2 year curve. Why would the carry trade max out like this so close to the expected increase rates? My presumption for this is it's overhedged. And I think the last time Japan hiked rates, we didn't see an immediate reaction, but we did end up seeing a reaction. So it came like a few days later. And that's likely because, the Bank of Japan telegraphs the fuck out of all of their decisions, like well in advance of making the decision. I think this one had about, a 2 week lead time where they said they were definitely hiking rates before we actually got the rate hike. And, in those situations, you have literally everybody hedging, and so you're getting like probably a little bit of compression on those hedges as that side of the position gets over leveraged, and so we see leverage move up a little. But those now that the rate decision is done, you're probably gonna see those hedges fall off, and that's likely where the volatility would be pushed out to. So I think that covers most of what's going on there. As far as bond volatility, hold on one second. Bum, bum, bum. Where's that fucking chart? Oh, here we go. So we've got a big drop in bond volatility, and part of this is, obviously the cutting cycle from the Fed. We started to see bond volatility kind of normalize when the cutting cycle began. And now that we've had more consistent and frequent cuts, we've continued to see bond volatility decline since like the big spike with the tariff tantrum. I mean, the current environment is not seen as perceived as having a ton of macro risk. Geopolitics have calmed down, even though there's largely been not a lot of changes there. You did miss the ticker request, but you could throw one in there if you want to. Did Japan delay the effective date for the rates? I didn't even see that. Hmm. Interesting. I feel like usually it's immediate. Well, it might be the 22nd where you're at. Thanks, numerology, Mike. Yeah, I've always wondered if numerology Mike's just in the background being like placing bets on the market based on some cosmic calendar and just winning every time. Well, Samsung doesn't want to make SSDs anymore, but I don't think it just all goes to SanDisk. What about like Seagate and Western Digital? Who's the other one? Crucial. I'm trying to remember which one of those are just also Samsung uh, SSDs, but like rebranded. Crucial's Micron, yeah. But Micron's backing out of SSDs too, aren't they? Hmm. This feels like the crypto mining cycle all over again, except replace crypto miners with AI data centers. I think the upside price shocks are going to make all of this data center rollout shit about 80 times more expensive than was what was initially predicted. I mean, think about it. Like, if you didn't pre-order memory and you wanted to start building a data center today, the cost of RAM is up like 900%. We're no closer to quantum computing than we are to fucking artificial intelligence. Anyway, let's talk about what matters. So, move. We have more certainty in the Fed path. Swings and yields have been narrow. They've been aggressive, but they've been narrow. Um, The Treasury buyback is helping. And now we have a little bit of QE, which will continue to help hold down the front end. I would say the big shock to the bond environment is likely to be inflation, or the biggest risk to the bond environment would likely be inflation. If we saw substantial tariff pass through in prices, and we haven't, right? But not because it doesn't exist, but because we're just not getting CPI data. Then possibly we would see, the front end volatility pick up more substantially. Remember that, like, move is basically move is insurance against the price of rate changes, or it's the price of insurance against rate changes over 30 days. So right now, insurance on unexpected changes in rates over the next 30 days is very cheap. I guess that's the best way to put it. And yeah, I mean, it's just, we just got some QE. Things should be fairly stable at the front end, at least for now. Japan rate change as it goes into effect can be a shock. So we might see some effect from that coming into this week following the rate hike. I guess if we start to see this, like, SOFR IORB spread break apart again, despite the Fed's quantitative easing, that would be really bad on the front end. That could drive vol, but yeah, right now there's just, and we're also not near any, like, major refinancing cliffs, not until, like, Q2 of next year. Without real CPI data, doesn't that introduce uncertainty in the market? Won't that lead to fear? It's starting to, yeah. I mean, volatility is staying more elevated. We're not seeing, like, VIX dive down to like 11, and 3-month VIX down at like 13 or anything. Oh no, we can get downs for a number of reasons. I'm just saying that currently the bond market is not pricing in a lot of volatility in rates over the next month. The reason shocks are shocking is because generally, before they happen, things are not priced for them. So, mm, I wouldn't say that the bond market's leading the equity market here, but sure. 7K is definitely a big shiny target for bulls. Well, I wouldn't say Google Schmigel Diffendorf. Differndorf. Well, I probably wouldn't either. At least not in polite conversation. So we have slightly elevated volatility on equities, but lower volatility on bonds. Again, that can change really quickly, and it could just be that insurance on bonds is mispriced right now. Supposedly at their next meeting. I need to stop eating sun chips. All right. So that covers most of what's going on with bonds right now. Yeah, I guess I would look like for the SOFR IRB spread to widen again, and to stay widened into the end of the month, and see if the Fed's QE matches the rate of issuance. I mean, we're gonna get new QREs and stuff like that. We're gonna get new funding announcements out of the Treasury as we move into the new year. And some of that's obviously gonna have an effect, because if the Treasury is still issuing, like 200 billion at the front end, and the Fed's only sucking up 40 billion of that, or 180 billion of it over the quarter, then there's still some substantial risk that bank bank reserves aren't going to have time to reaccumulate. Misprice insurance like misprice CDS in '08, or is that crazy? I mean, credit default swaps on U.S. Treasuries are definitely cheap as fuck right now. But CDS on private equity has been going up. So we're starting to see more higher yields on corporate debt. You could end up getting like a lot of repositioning if corporate debt yields start to look vastly more attractive than UST. Do you watch the 2-year, 3-month spread? Not too much. Why? I think the Fed just keeps an eye on that for like open market operations. But yeah, let's see what happens end of this month. I mean, I think it could be interesting. We have a lot of stuff. We have corporate buybacks ending. We just had a rate cut from the Fed. Rate cut plus QE. And we had a rate hike from the BOJ. And then we have a really uncertain reading on inflation right now, which is, if nothing, risky. Precious metal markets are still betting on a dollar decline. So I think as we get into end of month and like cash demand picks up, I'm really interested to see what happens with like reserve, like overnight financing, and like uh like on RRP, and see if like on RRP starts to reaccumulate, which will be kind of interesting as well. One sec. So on to Tiggers. First one's Palantir. I don't understand how you can enjoy sun chips. Try the salsa ones. They're really good. Hmm. That's not such a great look. Mm. All right. Tap it on Gamma Max, and Gamma Max is coming down here. This looks a little bit bearish. Haven't seen Gamma drop yet, but it's a fairly substantial amount of ongoing in the money profit taking. Low delta out to the upside of 200. Hmm. Skews flattening a bit. Obviously, things are pretty earnings dependent here. Earnings out in February. I would say things look pretty flat between here and 200. And then possibly a little bearish if it were to fall back under 180. But I would watch, yeah. I would watch this in the money positioning and see if it continues to erode. If it does, then things might get more bearish a little faster. The other thing I would say to watch is continue to see if implied volatilities fall off. And watch for like HV10 to start trending down. That might be kind of bearish too. If you get like a confirmed turnaround in the historic vol, it starts to fall back like sub 40. That might be like kind of a good indication for like near term shorting, especially in the gap between now and earnings when volatility is declining anyway. That's because most people are holding, short dated bonds. Like twos and fives, with emphasis on the twos recently. But that's where most of the demand is. Hmm. You're welcome, Cool Daddy. I have more crunchy things if you want. Is it RDW and ONDS? Yeah. Although I don't really care about ONDS. I thought I made that kind of clear last week. Um, yeah, so Palantir, flat to slightly bearish. Keep an eye on HV10. What's next? Tesla? Tesla dumped pretty hard last Friday. Caught a little bit of bounce at 475. Kind of looks like a weak bounce, but guess let's take a look at the options data for it. Tesla looks pretty weak going into Friday. Actually, like if you were around in the round table, I was talking about shorting it because it looked like it was going to come down. Um, some flattening and skew. IV10 starting to dive. IV30 is coming down pretty steeply. Hmm. There's definitely substantially more downside demand on Tesla right now than there is demand to the upside. Gamma, like the top of Gamma is kind of softening a bit. Gamma falls off very rapidly on any downside move. It looked real thin out to 500 before, yeah. So I mean, this could continue trending down. Like I know it caught a bounce on 75 back to 80, but if the 80 test fails, could open a move down to like 460, 450. Pretty easily. There's a little downside gap here. Um, Down to like 463. Keep an eye on skew adjusted delta. That's starting to fall a little bit negative. Gamma on the chain starting to fall off a bit too. Maybe the other interesting thing to watch would be, I guess, if you continue to see Gamma Max drift up over time. I don't know if I would want to get into like a long-term short on this here, but in the near term, it still looks pretty good. Hmm. Hmm. Yeah, like gamma to the downside is really gappy. There's like a little support at 70 and 50, but not much. And if we go out into like OPEX, it's pretty much all there. Wonder how much of that is after OPEX. Doesn't look like there's very much. So this might stay like 450 to like 500 over the next few weeks, but it does look like people aren't positioning here on the chain further out. Looks like most of that falls off in January and it gets real thin to the, well, at least for in the money call positioning. Um, so yeah, that still looks kind of bearish. I think that might continue to see that drop off. Um, a good technical pullback would be like 442 or like 415. Would be maybe the two levels I would watch. And then what's next? Nvidia. Hmm. Well, the gamma curve on Nvidia is getting very steep. That's weird. Usually Nvidia's gamma curve doesn't have so much potential volatility to the downside. It did just catch a small bounce off of gamma neutral, which, you know, over the last few years has led to retests at gamma max. However, on this bounce, we see delta continuing to decline and skew adjusted delta getting more negative. Gamma picked up a little bit on the bounce, but that almost fell negative too, and that almost fell negative for the first time since I guess April. Yeah. Hmm. The video actually looks pretty bearish. 180 is still supportive, and there's a lot of interest here around spot, but that thins out a bit over the new year. The in the money shit looks like it's falling off soon. A lot of it on December OPEX, which is end of this week. Oh right, not December OPEX. Last week of December. Hmm. Nothing on 1-2 really. A lot of tech looks kind of bearish out past like the leap expiration. Burry agrees is 35% out of the money puts. Hmm. You know what's actually really interesting is IV90s coming down on NVIDIA. And the price of like 90 plus day options, 90 plus zero DTE has been so elevated for so long. So that's kind of interesting. A little bit of a yeah, a little bit of bearish skew going into OPEX. I wonder how Delta looks. Most of the Delta's out on the leap. Most of the Gamma on the weekly. Yeah, this like 180 to 160 range is not, it's not very well supported. Like there's a little bit here near spot 75 77.50, but very little delta out to the upside. Like it doesn't look like anybody wants to buy Nvidia at like 190 or 200 at all. At least not into OPEX. Later on there's some interest out there, but that I feel like that's probably sold. Even that's kind of weak. 210s. Those are probably spreads off the 200. Huh. Yeah, this is really interesting. Like so you see how like the slope is very very steep and there's really no upside. Like the upside peak is smoothed out. So bets out to the upside are kind of flat going forward. And then gamma falls off really, really fast from spot all the way down to like 165. And then under like 160, no one's really making any bets out there. But the like steepness of that is kind of wild. Usually bullish equities, you have like a really defined peak to the top of the curve, or even like this, where everybody's making this bet that like price is going to be somewhere around here. And really, like on Nvidia right now, this is kind of showing us that nobody is really betting that it goes up here at all. This is just fucking, there's just nothing. And then people are pulling back the in the money options. So like when people start taking all their profits from in the money options, you get a curve that's more normal where you have like that, and this starts to flatten, and this starts to flatten, and then the slope here starts to get steeper. And that's not a great look. So it's really starting to compress. I think surety on earnings is getting a little bit more locked in, and people aren't making as many speculative bets, which is probably why we're seeing IV across all the tenors pretty consistently continue to decline. And as HV catches up with that, you're going to get a lot more selling of the still relatively high vol on this, which is going to put downward pressure on the stock. And I mean, we've been seeing that. We've been seeing that for a little while now on Nvidia, since it like got up above 210. But that seems like it's going to continue to be at least somewhat consistent. I would watch the like 65 support level. People might be more willing to reposition there. The only thing I would be really worried about would be that the drift down is just super kind of slow until we move past more larger expirations where you stop getting those supportive charm flows. So maybe past leap expirations. This would be something to watch. But I will say that selling calls on it looks pretty great right now. As long as there's nothing that pops implied vol on the front, like 30-day call selling seems to be fairly fucking consistent over the last couple months. I don't think anyone's gotten assigned on shit. Upstart. Oh, that's kind of interesting. Yeah, I mean 50 is still a problem here. Uh, this is slightly bullish going into Friday, but Delta's continuing to decline. So there's some short-term bets getting tossed on here. Well, looks like Gamma Max rose a little, but I'm not really too sure that Gamma Max is even correct. Things don't look as good out above 50 as they did like a month ago. Um, and Delta out there's a little weird still. Like there's some shit that could get squeezed off up here in the 60 range, but I don't think the rate environment is favoring them at all right now. So probably just more fucking chop. I mean, we got the bump from like 33, but I don't see any reason for it to see a significant amount of growth. I mean, this looks very much like the 25 through Feb 25 through like June period where Delta on the chain fell pretty flat. Gamma gets like Gamma flattens out, like just loses interest. Um, so yeah, I would say again like something that benefits like call selling or spread selling. Maybe a little bit more bearish than the big tech stocks we were just looking at. At least like the 30-day skew. 60-day skew doesn't look too great. Um, so yeah, just boring, not interesting right now. Fubo. Oh, what's Fubo doing? Fubo caught a little bounce around 264, which is an important support level previously. I wouldn't be very confident in that bounce unless it got back over $3. There is some covering going on it. You can like look at the liquidity profile for it and its ETFs. We saw a little bit of covering on this bounce, so at least people wanted to buy back some shorts at that level, if nothing else. We're not really close enough to the end of the month for it to be like ETF FTDs, so it's probably just short covering. And then, I mean, on the option side, there's just never anything fucking interesting on this. I know earnings are expected to expand as things move forward, or at least earnings estimates are expected to expand. Not there yet. Skew steepening the 10, steepening at the 30. Friday's bounce had a little bump in implied vols, but still looks kind of bearish to the downside out until like Jan 9th. Things normalize around the leap expiration. And then after Feb, things look a little bit more normal. So maybe like slow recovery into the next earnings, which isn't for a while. I don't think. Wait, is this not right? Last was November. No, there's an earnings report day somewhere in here. Does anybody know what day the earnings are on for Fubo? Next quarter's earnings? What are there, like 4 people here? No one knows? Alright, I'll look it up. Sometime in Feb. Hmm. Nope. Not a lot of anticipation for any of that. Still looks a little bearish. I don't know. Yeah. Not interesting. Carvana? I'm still short Carvana. I got a couple months, but let's see. Yeah, it still looks kind of bearish to me. Failed to bounce on the like 450 level. Retesting it again as of Friday. Delta fell off pretty hard. Options are getting a little bit more sold. Not a lot of supportive gamma below spot. Room to move down to like 425, 415. Skew still flattening on the 30 and the 10. Applied vols are starting to pick up. or the historic vol starting to pick up on the 10, but implied vols are continuing to fall. So I think still a lot of call sellers coming in here. Definitely interest to the downside out to like 410. Even out on the OPEX expiration, it's skewed slightly down. And yeah, seems like there's a decent number of downside bets. Gamma's still positive, but moving towards negative, and the skew, like the curve of gamma overall is steepening a bit. I would say seeing some in the money put buying, and we're really just not seeing any interesting calls except way out of the money, and those are definitely sold. No one's buying 490 calls, so at least I don't think they are. The IVs wouldn't indicate they're being bought. So yeah, I don't know. Fucking gamma neutral seems like a decent target here. Maybe gap fill. Probably continues down. So still looks bearish though. Same reason I shorted it at the top. Let's see what's next. SMCI. This one could be a little bit more interesting. Ooh. Quite a lot of compression in the positioning here. Delta's coming down, but it might start to re-expand. Pricing going up in the sector is probably like a good macro headwind. Lots of negative delta out to the upside to squeeze off. Big support here. Getting out above 3150 opens up a move to 3540. I'd imagine IV is already fairly low, so this is like definitely not a like calls are pretty cheap unless you go out to like 60 days and then they get more expensive. But I would say 30 to like between 10 and 45 days calls are pretty cheap. Hmm. That'll be hard to get over. So very, very hard to push over 33 to the upside. But if that keeps filling in and you start to see that like curve like get like more like that. And this space fills in, moving, that peak higher. So you get out of the money interest. This could get bullish really fast. So I would keep an eye on the gamma curve here, because it's kind of interesting. Keep an eye on the gamma curve, keep an eye on delta. It's in a decent position to move up to 33. Just very hard to move above that. And $2 really isn't much room. This is actually one I wish I would have seen a week ago as it dipped below VN. I would have probably gone long on it. But they definitely benefit from the inflation in the cost of services and goods in that sector. So a little bit bullish. Maybe like a good time to get like 45-day calls and see if any of those metrics get better. Like if like HVs move up or IV turns around or that upside gamma fills in. You start getting more out of the money interest on it again. But right now, probably not worth trading without Some clear sign of one of those three things. MSTR is next. So technically the Japanese rate hike should be really bad for Bitcoin, which is generally bad for the price of... What the fuck? What the fuck is happening? Huh. Did I hit something on my keyboard? Oh. Wait. Hmm. What in the fuck? Every time I... What's going on with my keyboard? Uh, okay, that was weird. Alright, I got it fixed. I think one of my keys got stuck or something. Hmm. Similar position. Doesn't look near term bullish, but probably well supported at these price levels. There's a lot more upside interest on this than there was on SMCI. Yeah, quite a lot more. Out to about 180, 182. So definitely people playing a bounce in Bitcoin there. It's 185 is about where Gamma Max is. So this could be set up for a bit of a run. It seems like there's some like put selling going on below spot. Yeah, down here like 160, 155, 150. Delta trails off to the upside pretty quickly, but some of these pits might be sold as well. Let me see what the OI changes. Oh. Uh, go to like 250. Yeah, it looks like people are getting bullish on it at least. Yeah, these puts look sold. These calls look bought. Let's check out the implied vols. Yes. I've HV30 still falling. HV10's flattening out a little. IV10's still falling. I'll probably wait to see if like HV10 moves up or IV10 picks up. There's a little bit of skew to the downside still. Gets better. Gets a lot better into Jan, but short term it still looks a little stuck. I guess a breakout above like 170. Even above 165 wouldn't be too bad. It would at least will at least open up the opportunity for 165 to turn into support here. This is very close to falling below positive delta though, and if that if that happens, that's pretty bearish. Hmm. Seems like out of the money interest seems to contrast sharply with like in the money support. There doesn't seem to be a lot of support here, but people are betting on the upside, which might just mean they're stupid. I guess my problem with this is it's not a leading indicator of like Bitcoin's price, and Bitcoin looks, you know, kind of shitty and could get like significantly shittier following the JGB decision. And if Bitcoin continues to fall, this has a ton of downside room. Like this could dump to like 150, 130. Yeah, like 130, 135. So I don't love the way this looks at all, to be honest. Next one's ASTS. Huh. Interesting. I wonder if they just bounce it into the short dated gamma and like squeeze off and then sell off again. Yeah, so above 170, worth being bullish on. Current price, not really. That's where I'll land on MSTR. And a failure of 160 is bad. ASTS. This looks okay. I mean, Gamma's picking up. It's meeting some sell pressure. There's some upside interest, but in the money profit taking. 30-day skew is starting to steepen, so you're getting some demand for downside protection, which is picking up, but hasn't really moved substantially. IV's still kind of turning around into falling historic vol. There's room out to like 95, 100. Hmm. Yeah, I want to see what this looks like after the leaps shake off. Um, but it's like slightly bullish. I guess continued demand, something pushing like IV 10, 30 faster. Um, like I could definitely see it hitting 80 or 85. Beyond that's a little trickier because there's just not a lot of positioning up there right now. But Friday's price action definitely reinvigorated some bulls. So yeah, maybe it tops out. Maybe it tops out just a little bit above Gamma Max, 85.90. ASTS D Pro. D Pro. Yep, I don't have data on that. Dragonfly? Motor vehicles? What the fuck do these people do? Is this just like another Reddit shitstock? Oh, gross. Some dog shit drone company? I don't care about this. It's accumulating. If you wanna try to chase it, are they like friends with Trump or something? Just pure speculation with no like actual investment thesis besides the government will support them because cronyism. I guess it's just gambling, but sure. It's either worth nothing or 30 bucks. It's a slightly weighted coin flip towards nothing. DBN. Highly doubt the options chain on DBN's all that interesting. It looks bearish right now. Might be a little bit of support here at 35. That's been a pretty key level for like the last year. Yeah, there is. There's probably sold puts there. Synthetic, so big fat synthetic long at 35, kind of propping shit up. Um, this kind of looks like it could just bounce between 35 and 37.50 until oil price is up. I wouldn't say it looks very interesting. It's got enough positive delta on the chain that it's supported. If it loses 34.50, that's bad. Gamma falls off really, really fast. Probably fall down to like 30 or 25 quickly. But for now, supported a little. See if it continues to recover here. Technical breakout would be above like 37. Gap fills to the upside out to like 38 towards 40. But if this is hard to hold, above 37 would be even harder. Next, RDW. Ooh. So some profit taking on the last Gamma Max test. Positioning reaccumulated really, really quickly. A little bit of delta fly off the expiration. Yeah, if holds 8, it looks like there's good interest out to 10. IV's picking up on the 30-day, so there's definitely some longer dated upside demand. Skew looks pretty good, nice and flat, slightly positive. This expiration not great, but that changes pretty quickly moving forward. Longer dated shit like next 2027's very bullish. Yeah, there's room to move up. Peaks out at like 1150. Guess it would depend on vol, but might need to wait for Gamma Max to keep moving up. If I saw another day of like fairly flat price action, but Gamma Max like spot closed below Gamma Max, like Gamma, so basically opens here, trades kind of flat for the day. Gamma Max continues to move up, and Delta kind of skew adjusted Delta shifts back towards positive. That might be like a bullish indicator on this. Looks like there's some like actual serious interest though. I wonder if this would reprice. It's been worth quite a lot more than in the past. It's a nice big old fucking wedge on it. Yeah, I mean, I would believe it. That was a big move in Delta. It went from, what, 60 million to almost 10 million Delta added in one day. For a stock that doesn't really have a very big options chain, that's quite a lot. That's one of the reasons it blows through Gamma Max so often. It's just squeezing, basically. So there's like some Vega out to like 20. Shorter dated, like Vana could drive a move as high as like $12. Especially with like 8 in the money. IV30 looks very impressive. 60-90, not so much. 10 also. So a lot of short dated demand on it to the upside, which could be, yeah, continued bullishness. What was the last one? Somebody asked for ONDS. Uh, yeah, I don't love this one. Looks like it's gonna flatten out. 10, 12. A little bit of delta out there, but maybe 30 is kind of low. Maybe 10's falling off a cliff. Short-dated skew steeping. This looks like short-term bearish, if nothing else, over the next like couple weeks. There's support though at 9. Losing 9 probably falls back to 750. It had a big day Friday, but I could see that failing and pulling back again. $9.22 close. Oh, is that the close? 24. Yeah, Delta. I mean, this doesn't even look as. There's a lot more Delta on this chain than there was on the last one. But the change in Delta day over day on Friday was like less than 10 million. So less Delta than the other shit stock we just looked at. RDW. Yeah, I don't love this. It's just like, I feel like it's going to be choppy. And I'm not really sure this was very well telegraphed either. Maybe there was news. Yeah, I would agree with that. The shorter dated calls at 9 look sold. These, like the weeklies and the leap expiration one, those are probably sold. The 10s probably are too. Some of these might be bought, like March, June, 2027. I'd imagine those are probably bought calls. I mean, I guess it's a little bit confidence inducing that people are buying options so far out, but I still think could have a bit of a problem continuing to move up from this point. It's just going to get choppy, and there's not a lot of range. Like 9 and 10, it's very easy to get pinned between those because gamma's so high at both strikes. But like the 950's got very low gamma, so it's bullish on a breakout at 10 because it can Vana squeeze. But getting above 10 is really, really tough. Getting above and holding above 10 would be really tough, especially on like declining gamma. All right, I'll do one more. DJT. Ooh. Um, that looks like it's squeezed out. Probably, probably a pullback. At least short-term pullback. Yeah, I can see this falling back to like 14. Delta thins out a lot to the upside. Supports at 15. Mm, I don't think IV is going to give us a lot of information here. Yeah, skew flattened out Friday. IV30 stopped climbing. IV10 pulled back really sharply. So probably call selling. We could check the OI update and see where. Looks like 16 out to the upside. These are probably sold, like all the way out to 20. Maybe 25s definitely are. Looks like some put selling there. So 14's support. So I think maybe we see this pull back towards 14 and then see if it like bullish positioning reaccumulates on it. Might have like another flat day before that happens. There's still plenty of profit taking that can happen here. So could be flat for a little bit while Delta bleeds off, but eventually I think it'll fail back towards like 14 where there's more substantial support, and then I'd be looking for maybe for some confirmation. But right now I would say bearish, peaked. Like it already ran like the full extent of its like upside curve. So until this builds out more and we get like a better peak to the upside, it looks like it'll be hard to push up, if nothing else, at least with the current positioning on the chain. But there is interest building out towards 20. So 20's definitely a target. I just want to see more. Like I don't want to see more interest at 1750. Some of this start to fill in. And then yeah, out to 20 would be possible, but given the profit taking and the momentum of the sell off last week from the high, I think it could probably continue down before it moves up. Oh yeah, that was kind of tough. But it might be like an intraday pullback towards 14 because the volumes are so high. So be careful of that. Don't expect to get like a full day of pullback or anything. But I could see like an open lower than Friday's close, maybe like 1450, and then support, and then like probably another push out into that like upside interest. This seems like a weird entry, kind of right in the middle of confirmation, though. Like, I wouldn't want to enter here. I'd either want to go long at like 14 on a test of 14 or break back to the upside of 15. I don't think I'd want to play the 16 to 20 range, though. That seems really risky unless something shifts dramatically. I think that's it. Do you guys have any more? I'll do hood. Hood doesn't look very interesting. It's kind of bleeding some delta. Gamma Max is kind of starting to decline with spot. It got a little support over the last 4 days. It's kind of a pretty weak bounce on the volume side. Looks like most of that support's at about 120. That fails. Opens up a pullback to like 115, 110. Breakouts above 123. Some Short-term up pricing of calls. But puts are like 30 days still pretty flat. 30-day HV and IV are continuing to drop off, but they're slowing a bit. Oh Jesus. Yeah, this could dump pretty fast. I'd be especially wary under 20. Under 20 this gets really bearish. Starts to slide quickly. The upside's hard to grab. Not a ton of range. I mean, like, probably like 130 would see some pushback. But yeah, if falling below 120, which is only $1 below spot, would be pretty bad, I think. Also, like Friday's upside candle inside the prior 2 days, which isn't really very bullish. Low volume, weak bounce. I would say retest the low, and if it fails that low, down to 100. AVGO. That looks kind of bullish. I don't like that Delta's still falling off. But yeah, I would expect this could bounce back up. I'm sure there's plenty of out of the money, yeah. Plenty of gamma to the upside out to about 360. Oh shit, I want to look at the delta on that. Yeah, there's decent delta out to 60, 72. Keeping the 40 in the money is slightly important, but things on this aren't really bearish unless 330 is lost. So the upside looks pretty good. I mean, definitely some demand. Seems to be persistent. IV30 hasn't really risen much. Neither is 10. But HV is wild. So long delta is probably really good here. Because IV 10 and 30 are so cheap. Yeah, this looks kind of short term, at least short term bullish. I would be worried about the rest of the sector because like Nvidia didn't look super great, but it's possible that Broadcom has some like negative beta to Nvidia anyway, or at least that's how it kind of looks like this is being traded. I wonder what call buying looks like. Yeah, there's some at the money, in the money. Call OI increasing. Not too much far out of the money until later, and most of that out at like 370, 380. So yeah, I would say that 40 to 60 range looks pretty good. Puts are accumulating out of the money, which isn't very bearish. Although there is some in the money puts being added over the next couple weeks. Yeah, I think this kind of looks good to the upside. It's got to hold 40 though. If this lost 340, I think things turn back the other way. This could be like a good like entry with like a tight stop. Just see if it keeps taking off. Upside technical confirmation is like 47 and then 82. So that would probably be where that push is. Maybe 62. 62 could be kind of interesting too. 62 and 82 to the upside for resistance. Support at 40. Failure at 40 opens the downside move up. Back to, I don't know, fucking 20. I'm not even sure 20 is all that supportive here. Yeah, 20 is a little bit supportive. 20, 310. 320, 310, 300. Downside supports. Easy to start sliding under 20 though. All right. Yep, I think that covers all of them. So I will, I'll get Pickle's picks out tonight, and I will catch you guys later. Peace. It's good to see you too, Jim Martin's wife. Good to see you too.